Man, oh man, what a move today. Markets apparently are a little bit nervous ahead of the FOMC coming tomorrow afternoon. Boy, do we have a lot to cover in a very important video tonight. We have big moves on the charts. Anytime we see big moves, that means we have big opportunities the following day. Not to worry, I'm going to cover all my favorite trades in the video tonight. Then we have a game plan to make some money on FOMC Wednesday. Before we jump in and get this party going tonight, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And as always, I appreciate you guys tuning in and supporting the video tonight. If you enjoy this stuff, hit that like button for me. Give me a shout out down in the comment section below. Thank you so much for tuning in after a wild session. But where are the best trades setting up here for what could be a very good Wednesday tomorrow morning in our trade room? We saw big moves, big move down on the S&P, big move down the Nasdaq, monster move down on the crude oil. I'll tell you, anytime we see big moves like these, it really tells us three important clues about what to expect tomorrow. In the video tonight, I'm going to talk about how we can use those three important clues to find the best trade setups to make some money on Wednesday before the FOMC comes out. So we have a lot we're going to cover tonight. The markets are going to likely be a bit confusing with all these big moves, but that's all right. I'm going to give you guys a good roadmap to find some good trades on FOMC Wednesday. But now, before we jump in and talk about each of my favorite trades for tomorrow, let's all get on the same page here because there's a bunch of news coming out tomorrow morning. There are really three major news events you want to be aware of. One is the ADP employment number coming at 8:15 Eastern Time. Later in the morning is the ISM Services Index at 10 o'clock Eastern Time. And of course, drum roll, everybody knows about the FOMC announcement coming at 2 o'clock, and of course the press conference coming tomorrow afternoon. Obviously, the FOMC announcement is the biggest one of this, of course, tomorrow afternoon. I wouldn't bank on the ADP employment number being that big of a catalyst. I will definitely be watching that ISM Services Index tomorrow, although it probably won't affect the announcement at 2 o'clock. The ISM service, remember the services industry has been red hot lately. It's been one of the hot buttons on the list of the FOMC here. So we definitely anticipate that 10 o'clock news and most importantly, that 2 o'clock tomorrow afternoon news, the FOMC announcement. Now, I'm not going to waste any time talking about what if they raise this or cut that, right? That is irrelevant. The goal for tomorrow is get in early, find trades early. Think of this like a Friday, right? Well, kind of like a Friday, right? On Fridays, we always talk about get in early and leave a piece to run. Yeah, this will be get in early, get out early, right? Take the money and run before that news comes out at 2 o'clock. You got to have a good reason to be trading afternoon on an FOMC announcement. And, with the price action we saw today, it might be a little bit squirrely tomorrow. So 10 o'clock Eastern Time, 2 o'clock Eastern Time tomorrow. Also, don't forget, there'll be no video newsletter tomorrow night. I hate to leave you guys hanging. I'm out of the office, though, the second half of the day tomorrow. That's okay, though. I'll be with you guys tomorrow, of course, in the trade room. Back to our charts, though. Let's go over all my favorite trades now on S&P, Nasdaq, crude oil. If you like making money, I would definitely watch all the way to the end because every trade I talk about tonight can be applied to your favorite market, and I will find a way to wrap it all together. Don't you worry, towards the end of this video. A couple things here first. This is an 8,000 tick chart. All of these charts are tick charts here this evening. This is the 21 EMA, the exponential moving average. And as always, I do include extra time frames. I include 60-minute charts, 4-hour charts linked up in the description of the video. I like to use the 60-minute chart to give me directional bias. The 4-hour chart gives me some big turning points on the chart. If you want to get a bigger picture look at the market tonight, right, definitely check out those links down the description of the YouTube video. With that said, what's the most important factor on the chart right now? The most important factor right now is the sheer strength and size of this move going lower. Like I said earlier, right, markets apparently are a little bit nervous ahead of the FOMC. All it took was Janet Yellen talking about money running out, the debt ceiling before the market apparently, or the JOLTS report. It's tough to tell exactly what spooked this market. It probably has to do with the FOMC. Now, why is this big move down important? Well, really, this big move down, it tells me two important clues. One, we can safely assume right now that sellers are trying to sell high and get a retest of that low. Anytime we see a strong move in one direction, we expect a pretty deep pullback, right? And a retest of that low. So that's the objective right now. The objective there for the bears is to take out that low. Now, another very important clue. A big move like this tells us that the odds of another big move down are not impossible. They're not zero, but they're very low, right? When markets make these really big moves like this in one day, it's very unlikely, not impossible, very unlikely we retest that low and keep going very far. We have a lot of level of support below us, both on the S&P and the Nasdaq. And by the way, the Nasdaq is very similar to the S&P here tonight. A little bit different, right? But very similar. So we have to expect that even though this market is very bearish in the short term, we have to anticipate buyers are probably going to be looking for ways to grab reversals off of that low. One of my favorite trades for tomorrow. The third thing is with an FOMC meeting tomorrow afternoon, with this big move, we have to anticipate there's probably going to be some sort of range that will develop here. Okay, we don't know exactly where it is yet. I have a small range here, small range here. So three things, right? Strong move down says expect a retest of that low. The size of this move says don't expect, again, nothing's guaranteed, right? But it's highly unlikely we see this thing go much further than that low, and there'll probably be some sort of range that develops here, unless, of course, this thing completely takes off, right, and runs right back where we came from. And I will talk about the game plan on that. So knowing those three components, right, knowing those three clues here, buyers, right? Buyers would love to buy bear traps off the low of this channel, would love to buy reversals off that low of day. I also, there's possibility for the buy side here right now, if we do end up going higher, to get a larger channel coming in and grab some traps on the way back higher. It's easy to forget that when you go to your 60-minute or your 4-hour time frames right now, we're still an overall bull market. Now, obviously, it's very difficult to call this a bull market right now, but remember, this is probably all happening because of the Fed tomorrow. Our only big variable right now is it's tough to anticipate a big move before the FOMC comes out tomorrow afternoon. You know, that's the one thing. You know, we're probably not very likely to go all the way back, at least not until after we get the FOMC tomorrow. You know what I mean? That's probably the one big kind of damper on our party here for anything of a reversal. You know what I mean? Is the FOMC here for tomorrow. So I want to cover a lot of this here right now. We're going to cover this over the S&P and the Nasdaq. My favorite trades are reversals off the low, just because, again, the odds of us going much more below that low are pretty slim. They're not zero, but they're pretty slim. And then later on in the video, we'll talk about if we do get this thing to grind higher, because, I mean, come on, right? We could easily grind all the way back. We've got this big range up here. It wouldn't surprise me at all if by sometime tomorrow we're up around these highs, right? Looking for bears coming back in and getting that short off the highs here. So let's break this down. Let's talk about the best ways to kind of plan this. If we end up going lower, right? That's what should happen right now, right? The objective is to go back and retest a low. If we end up going lower here, remember, the objective is to retest this low. So I like the channel. I like the fact that we could use the top of that previous range right there for a possible breakout pullback. If you're a student of mine, if you've taken my free trading courses, you know I love traps. There's a trap level right there as well. So I think it's worth looking for an entry long off this area. Could be a bear trap entry there. To do this though, right? To do this, to actually get that long to trigger properly off that low, we're going to have to obviously respect the sellers here, because they're very strong and trying to retest that low. So as we go lower, I really have to, because of all that momentum for the bears right now, I have to anticipate those sellers are going to try to run this lower, and I've got to let them try a couple times and try to use basically a 2-try failure with a bear trap to get in. This will be the safest way to kind of pick that bottom. I like the area, right? I like the area here for that reversal. But again, with the objective still in place to retest that low, I'm going to want to see these bears try a couple times. That way we can use their stops as fuel, right, with a failure pattern. And I'm going to really want to get some sort of trap entry on this because in this case, I'm kind of buying relatively high. You know what I mean? I know it's at a pretty low overall, but relatively high right there. So think about a failure pattern like you guys are learning in the free trading course, a failure pattern with a little trap entry at the bottom, right? You guys learned about both of those in the free trading course, okay? Now, another entry, if we were to roll back and retest the low, right, now we have what? We have mission accomplished, right? So strong move down, retest the low. Once we retest the low, now we can be a little bit more aggressive, right? Because now the sellers have reached their objective. They should be taking profit down here. If we can get some rookies coming in, it makes sense, right? So bears who sold up here, they should be taking some profit down around that low. If I can get some rookies trapped in, right? Let them try once, let them try twice. And keep in mind, it could be here. I mean, really the lower it is, the better, right? The lower it is, the better. I mean, in all reality, we hope they take out that low by a good margin. We hope the moving average comes down. We hope the sellers get caught chasing it into those lows. And this is a simple scenario, right? We're very bearish, but we're at a great level of support, right? Again, the odds are not that good for a continuation, at least not after a big move like this and with the FOMC tomorrow afternoon. So if I can use their stops as fuel, okay, that two-try failure, remember 2 tries, because we're so bearish in the short term right now, right? So once we get that nice signal, that would be a really nice reversal off the low. One of my favorite trades there. Now, also, too, if we can get this thing to pop and start to run higher, where does the market want to go at that point? It's going to want to go up and take out some of these highs up here, okay? This would be a great spot for a follow-up trade, right? Find a new channel off the high, okay? Bring it down off that low, and then what do we say? Look left, find some prior swings. Swings are where traps live. Get above the 21 moving average, get some bears coming in, get them to sell short, use their stops as fuel for a failure or a pullback combination. Really any of the entry patterns you guys are learning in the free trading course, right? Could be traps, could be failures, could be pullbacks, all right? And which reminds me, I know that most of you guys have taken this free video course. You've learned things like 2-try failures, reversals off the low. You've learned things like how to find new channels and grab that first test off the low. We cover all these entry setups in that free video series. But if you're watching for the first time right now, if you're one of the few folks who haven't taken that free video course yet, I'll put a link up here for you in the upper right-hand corner. Grab that link, take that free trading course, because the strategy you'll learn in that short video series will show you a simple trick to know exactly where the best winning trades are likely to be that day. And I'll teach you my 4 favorite entry patterns to help you kickstart making money on your own account. If you're tired of missing the best trades each day, if you're not getting the consistent results that you want, definitely grab that link up there. You will love that free video course. I get a lot of great feedback on that. All right, guys? So as we go lower, be aware of this area, right? Be aware of this area. And again, down in the description, I've got some more time frames down there. We have quite a bit of support down here. So I like the idea running them out, 1, 2, right? And then back up in. The only real variable is can we get some sort of trap entry, right, off of this channel? This is the most difficult one, right, because you're anticipating that retest of the low. Now, if all hell breaks loose, which is unlikely until after the FOMC tomorrow, if we were to take out that low, if we were to hold the pullback, right, off the moving average, and then what? And then jam, right, and really jump going lower, I would then start going out, finding new channels off the low, marking off that high, and then tomorrow morning we'll look to structure the entries, right, off the high of that channel. But again, this needs to be a very convincing, right? Take out that high. They have to pull back to that moving average and just literally rip this thing through these lows. There has to be enough momentum going lower that would suggest a pullback and a retest, right? Because anytime we see a strong move, we expect a retest. So if they can get enough momentum off that moving average, okay, I'm open to it. Again, like I said, I'm not. There's definitely a possibility we get another leg lower, right? But it's pretty rare, right? But the odds are pretty rare there. Again, find those channels and then grab your traps, grab your failures, right? Any of the entry patterns you guys are learning in that free video course. Look for that retest of the low. And then from there, we may end up seeing, right, the 1, the 2, and then back up into that range above. There will likely be some sort of range that forms there at some point here for tomorrow. All right, guys? Unfortunately, we don't have much more to game plan on that going lower right now. How about going higher, though? Right? As we go higher, there are really 2 scenarios that you want to be aware of if the market goes higher. One is a rip going higher, and 2 would be kind of a grind going higher, right? Those are kind of the 2 different scenarios to be watching for here as we go higher. Why don't we grab a look at that now in the NASDAQ? The NASDAQ is a very similar situation to the Emini S&P. First of all, is a very strong move down. Anytime we see a strong move in one direction, we expect to pull back and a retest of that low, right? It's a very large move down, 4 legs lower. We do not get trends that go 4 legs very often. You can see in this chart, it doesn't look nearly as scary, right, as the S&P did. The NASDAQ, for some reason, was not the leader of the pack today. The S&P led it. Size of that move, again, the sheer size of that move, it suggests that there probably isn't a lot more to go, right, below that low. We've got some more levels down below us here. Pendulum swing target, right, 13.12 and a quarter area. You can see these levels, of course, on that 60-minute chart linked up in the description of the video here tonight. So definitely thinking that bears want to short this thing back to that low. Would love to grab, like I mentioned on the S&P, would love to grab a double bottom reversal, right? 2-try failure up off of that low. If we were to accelerate through, hold that pullback, and blast going lower, okay, I'd have to bite the bullet on that. Mark that low, mark that high, and start looking at this as a trend down. And again, we'll flesh that out tomorrow once we know how big that move is. But again, at this point, it doesn't seem as likely until after we get the FOMC here for tomorrow. So a breakdown is possible. And again, remember, the key to a breakdown is it doesn't matter how strong that leg down is, right? They have to actually hold that pullback and keep it going. Right? They may run this thing lower and the bears may try a couple times and get snapped back up into what really will probably become a larger trading range up above us. All right? So be very careful chasing this going lower, right? Unless it, of course, pulls back, holds, and continues. Right? At that point, we call those are breakouts, right? Those are range breakouts. Okay, next up, how do we go higher here? There are ultimately 2 ways in which, right, we trade this as we go higher. On the NASDAQ, really the NASDAQ and the S&P. The S&P is a little bit more, the space above us is wider, right? On the S&P right now, you'll notice it's a hell of a distance up there, right, until we reach where that previous range was. The NASDAQ is a lot cozier than the S&P. So the danger on this is that we have to assume that with this trading range, okay, sellers right now would love to short that breakout pullback, right? It's just a range breakout, right? So range, strong run down. This area, right, the underbelly of that trading range is where you assume we're going to get more bears here. Now, remember, it's still an overall bull market. We're pretty mixed right now because of the size of this move. There's no guarantee the bears come in and crush this thing back down again, but we have to respect that area. So knowing that is the case, knowing that we have to be at least weary on the NASDAQ, the S&P has plenty of space here. If we end up running higher, right, if we end up running higher here, anticipating that bears are likely going to be waiting here, and, respecting the bears off this breakout pullback, if we do get this thing to run higher here right now, the key to making money, the key to finding good entries on this is going to be traps. Okay, so if we get this price, right, if this price was to simply jump and run higher here overnight. Again, this is the one thing I'm not so sure we're going to get tomorrow, right? Because we have the FOMC announcement in the afternoon, and the idea of getting a full-blown reversal just doesn't seem as likely, right? At least not until after we get the FOMC. A big move tomorrow just seems unlikely, right? Without some FOMC, gasoline thrown on it tomorrow afternoon. But if we were to get this, if we were to get lucky tomorrow, right, get a nice strong pop up early in the session, buyers will certainly be looking for those traps, right? They're going to anticipate that sellers are going to be trying to sell into it. And we talk about this in the free trading course, right? Traps are always my favorite entry whenever I'm worried about buying too high, right? Buying into this overhead resistance. Now, if we're really lucky, we'll find some channel, right? Some channel high, some channel low, right? And get that trap off that, right? Off that. That would be even better, right? That'd be even better. The next scenario would be a grinder. Okay, these happen a lot. Market's pretty bearish in the short term. The bears may not give up on this. The market may simply start to pop up and grind going higher, right? Now, if it grinds going higher, this is a classic example where you simply draw a trend line off those highs, you bring it down to those lows, you go looking left, and you find prior swings. Okay, most of the time in these kind of lazy bull channels like this, we'll get underneath the prior swing, but we talk about this in the free trading course. When the channels are wide and flat like this, usually the best entry pattern is to get below the 21 moving average, let the bears come in, try to sell this thing short. Once they do, then you've got their stops, just sit and duck, and you can buy right into the stops with a failure pattern. Okay, now on this one, on these kind of pop and grinds like this, think about first leg up, right? Kind of first leg, second leg, and then third leg, and that will give you an idea of where that target is. Again, this doesn't seem as likely here for tomorrow, right? This whole scenario going higher, just because, again, the FOMC isn't until 2 o'clock in the afternoon. But every once in a while, you'll get a pretty big move before the FOMC. It's just obviously with the big drop we saw today, markets are clearly a bit nervous, right? A bit anxious here for the FOMC for tomorrow. But that is the second way. You'll want to trade this, right? If we go higher. Now, it would be a good idea too to think about if we were to go higher and walk into this area of resistance and then get smacked back down. How would you short something like this? How would you short that? Because again, in all reality, if we go higher first, that low is still there to be retested. Right? This, again, becomes a breakout pullback area. If we end up making our way up to this 13,258 level on the NASDAQ, it's going to be quite bullish. And so the best way to short something like this is to wait for the price to come in, let the buyers now try a couple times, right? And then use their stops, right? As fuel for a failure into pullback combination. We talk a lot about failure pullback combos in the free trading course, right? So if we do end up running into this thing, now notice the difference in this, okay? We're not popping up pullback and higher high, right? That's a trap, okay? See the difference there? The key is the higher high, right? If we pop up and we start seeing lower lows here, lower highs, right? Those are buyers trying to get in here. They're struggling on that, and that's where we look for failures. All right. But again, if it was to pop up and begin to grind higher, right? Different story, right? Now we're seeing higher highs in price. That will now tell you find those big channels, right? Look for those prior swings and start getting in off any of the entry patterns, right? Off the low of that channel. All right, guys, that makes sense? The other variation of this would be a V-top, right? So we run up, the price gets smacked back down, right? Smacked back down. We start to get rolling over, right, as we go. I do not want to sell low in this situation. I want to mark off that low, mark off that high, and try to sell as high as I can. We talked about this last night, right? We're thinking about what your risk-reward ratio on these trades are, and that's where traps are going to come in, right? If we were to get a V-top on this. All right. Again, this seems to be a little bit less likely in this scenario right now. But again, anticipating a possible range here, unless we go lower, right, and then up, right. But if we go straight up here right now, we're more likely because of that unfinished business at that low to look for that short back down again. All right, guys. Now, over on the S&P, we have a lot more space to work with, right? So if we were to pop up on the S&P right now, strong run up, shallow pullback, higher high in price, notice how this pattern sets up. Okay, it's not a lower high by any means, right? Strong move, shallow pullback, higher high in price, traps, baby, right? It's that trap setup. And again, if I could combine that off some sort of channel, even better. Right? Or if we simply start to grind going higher, it's simple. Just draw that channel tighter, draw it higher, right? Bring it down and start thinking about where these prior swings are. Again, usually these slow moving channels like this, you're going to get that deep pullback. You want to get underneath the moving average and use one of my failure patterns to trap the bears in below the moving average and then use their stops as fuel for that next run higher. Again, a full reversal seems rather unlikely until we get the FOMC tomorrow. That's why I say hopefully we can get this thing back down to those lows and get the reversal off that low. That would be the best trade tomorrow for us, at least in my eyes, because then it doesn't require the market to do much more, right? It can stay right inside this range all at once. The key is getting back to that low, trapping those bears in, right? Somewhere below some of these lows here, and use stops as fuel. All right, guys? So those are my favorite trades right now, at least until we hear from the FOMC tomorrow. Remember, early in, early out on Wednesday. How about some oil? Wrapping things up on the oil, and we'll kind of bring it all together here on the oil tonight. Oil is really very similar to the S&P and the Nasdaq. We have a very strong move. Anytime we see a strong move down, we expect to see a pullback and a retest of that low, right? It's the size of this move is just so big, right? It's pretty much a $5 move there. The size of this is so large that the idea of going further below that low seems a bit unrealistic, right? Now, again, is it impossible? Of course not. But all we do as traders is we play the numbers, right? This is a numbers game. It's a little bit of pattern recognition. It's a little bit of numbers, right? It's a little bit of emotional control, right? Impulse control. That's really what trading is all about. So I look at this and go, okay, we're bearish right now, but again, going lower than this. Now, again, it can keep on going, of course, right? But I think a pullback, a retest of that low. I think sellers would love to short on a pullback here. I think buyers would love to buy that double bottom. We are at major support on the 4-hour chart. If you're an oil trader, you should go look at that 4-hour chart on the linked up in the description. We are right at a very, very tasty level, multiple levels of support. I should mention, and then of course, again, this range breakout, right? That's our range. That was the range we had going into this session today. So we have to think that this area right there, right, that area is probably going to be ripe for a short back down. So knowing all of this, right, I'd like to look for a crown reversal pattern to get off of this low. I would look for some buyer failures, some bull traps to short back down again. What you want to think about is this sequence right here, and this does not just go for the oil. This will also go for the S&P and the Nasdaq as well. Crown reversal, right? If I want to pick a bottom on this, I have to be very, very careful, right? We're very bearish right now. It doesn't matter how much support we have here right now. This market could easily keep going lower. So I need to see some signs of exhaustion right now on the behalf of the bears before I can even think about being a buyer going back in. Crown reversal patterns are very, very simple. We talked about how we like to use the 2-try rule. In fact, this is the first pattern we talked about today on the video. I want to see here bears trying at least twice. And because I'm anticipating that as we go higher, I have more bears waiting to come in and short this thing again, I need to buy as low as I possibly can. And notice how this pattern looks. All right, I get a lot of emails, a lot of comments each week. Is this a crown reversal? And most of the time, they are wrong. So look how this pattern looks. Remember, sellers, they want to sell high. And so the first shot for the sellers goes higher, right? Then we need a higher high in price. That will give us 1 try for the bears and 2 try for the bears. Okay, it's not a lower low, right? It doesn't go lower and go like this. 1, 2, it's not it. Right? Sellers don't want to sell low, right? They don't want to sell low. They want to sell high. So as we start pulling back pull back to that moving average, whatever, right? Bears come in, they'll try to sell it short. Okay, if they're unsuccessful, where are more sellers waiting? They're waiting above that high, not down here somewhere, right? That's the dumb money, right? Those are the weak hands. The smart money's waiting above that high to shoot it again, right? To give it a try again. So they go to a higher high in price now. Now we recruit more bears coming in. This is usually where they'll take it lower if they're going to try to take it lower at this point. And again, I want that again. I call it a crown reversal. It's nothing more, right, than 2 tries for the bears, higher high in price, and a trap off of that low. Okay, the trap is necessary in this because we have to assume that as we go higher, who's waiting up there? Bears. Why? Because it's such a strong move down, they're going to want to retest that low. We need to be in the green on that trade, right? Removing that risk, taking some profit before we end up back in these areas overhead. Okay. Once we find our way back up into the area overhead now what? Well, now remember, it's an overall bear market, right? Now we're running into resistance overhead. Okay. Now is the time to trap in some of these bulls. Okay, now we're back in an area now where now we trap the buyers in. Now, if we get lucky on this and it gives a nice deep pullback like this, again, up into that, I like that 74-ish area, 73.93, 74 area, right? Now, the buyers will likely think this is a full-blown reversal. Remember, this is not a reversal until they hold that pullback and jump off that moving average, right? They have to hold the pullback and really rip off that 21 EMA. Okay, this is what the 21 moving average is very, very helpful, right, for picking reversals or identifying a reversal. At this point here, we are simply hoping the rookies come in, not seeing the overall bearishness, not seeing the location they're at with the underbelly of that trading range. Let them, remember, in this situation, on a faster time, this is a 3,000 tick chart, right? This will be a much faster time for tomorrow in our trade room. When the buyers come in and try a couple times here, this will feel very bullish, right? They'll have their channels marked up over here. They'll be looking for that run going higher. And maybe they'll be successful, right? I don't know. But the odds say they shouldn't be, right? The odds say they won't be. And again, that's all we have, right, is to play the odds here and momentum. Once they do that, their stops, right, their exits, their fuel, right, is right there, right? Their pain is right there now. And now we can short right into that pain, right, and look for that run back down to retest the low. Okay, once we retest the low, right, do it again. Okay, remember, this is kind of the same thing we're talking about in the S&P and the Nasdaq right now, right? The S&P and Nasdaq, they've got that strong move down. They've popped up already. We are anticipating that retest of that low and then looking for that reversal, right? That bounce off of that low, right? So that 2-try failure we talked about, right, as it goes into that low. And again, it could be here, could be here, could be here. It's somewhere at the retest of that low. Once those bears try a couple times, we can then use their stops as fuel and look for that run where back up to retest this high overhead. All right, guys? So this sequence, right, the crown reversal, which is, what's the difference? The difference is it's a 2-try failure with a trap, right? It's a trap entry lower because we're so bearish at that point, right? And then as we go higher, we're looking at areas of resistance, taking profit on long trades, going higher. And then once we start seeing those buyers start to struggle, we then look for buyers buy low, lower price, and then bam, right back down again for that 2-try failure. Once we take out that low, that's what? Mission accomplished. Right? Once they accomplish the mission now, we don't expect more bears selling way down here. Again, rookies will sell. Smart money probably not going to be selling into that low and will look to ring their bell for that run back higher. All right. Obviously, too, if we end up kind of grinding down here overnight, game plan stays pretty much the same. You'll see on that 4-hour chart linked in the description here, right? We've got a pretty good, quite a bit of support down here, right? So if we do keep going lower, it's that same thing, right? That crown reversal, that pop up, that buyer failure, that retest of that low, right? Trap the bears in and back, right? And back and forth to create that trading range. Right? Because anytime we see a big move like this in one session, there's probably a range coming the following day, and we're trying to trade the edges of that range as it rotates back and forth. All right, guys. Now, I know I've covered a lot in this video. I know this is a pretty tough scenario right now, right? We got a lot of mixed biases, big news coming tomorrow. That's okay, though. Tomorrow morning, 8 o'clock Eastern time, we're going to get together. We're going to make sense of this tomorrow morning. We'll find some trades right before it gets too late. Remember, the game plan tomorrow is early in, early out tomorrow morning. And then grab your popcorn and we'll see how the market reacts to the FOMC. All right, guys, hope you learned a bunch here this afternoon. Don't forget, if you need any more clarification, right, if you want all the links, right, all the free course links, all the membership trade room links, all the higher time frames, they're all linked up in the description of the video. If you need any help with any of this stuff tonight, don't be afraid to call the office. I'm always here to help out. Just call us up. We're always here to help. We got live chat here as well. All right, guys, so don't be afraid to ring the office or use live chat if you need any help getting into the free class or anything we talk about tonight on the video. All right, guys, I'm going to wrap it up here for now. Good luck tomorrow, FOMC. Again, no video tomorrow night. I hate to leave you guys hanging. Believe me, I'd rather be here with you guys than stuck in some boring meeting tomorrow afternoon. I'll be back on Thursday night, and we'll do it again, getting ready for Non-Farm Friday. Guys, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here, not tomorrow, but be here on Thursday. Adios, amigos. Bye-bye for now.